let's talk about points. So I wanted to do a screen share and show you what points look like. So I think points confuse a lot of people. They used to confuse me too, but I think this will really help make it clear what discount points are and what it looks like from my end and how I explain it to people when I'm doing a one-on-one presentation. So let me get my disclaimers out the way first, because these are real rates and you have to be very careful anytime you're advertising real rates. This is not an advertisement or any offer. This is a presentation on what points look like, but because there are numbers displayed, I want to make sure that I'm in compliance and I am disclosing everything I need to disclose. So today is July 9th, 2024 at about 1:30 p.m. Rates, terms, and fees are current as of today and this time, subject to change without prior notice. My NMLS number is 1979986. This is for informational purposes only and does not constitute a commitment to lend or a guaranteed loan offer. Loan approval is subject to meeting lenders' criteria and other underwriting guidelines. Okay, so this is for an FHA loan, a 30-year fixed rate, FHA 30-year fixed rate. I think that's all I need to disclose. So I've got two different scenarios I want to show you because I want to show you points and then I want to show you the effect of credit score on what rates you get, because people there's a big difference in credit scores that I see. So all right, back to business. So this first one is for a 640 credit score scenario. So this is the same FHA 30-year fixed rate. I'm using Rocket to price in. Rocket's not always the cheapest or the most expensive. They're each day, each scenario, you have to price individually and see what the best fit for each client is. I'm just using Rocket because this is easy to read for most people and it's easy to navigate in this portal. So I'm just showing you using Rocket Mortgage. I'm a mortgage broker and I can broker to many different lenders. I'm just using Rocket for uh, example today. So all those disclaimers out the way. Let's look at points. So this is actually for the today's rates scenario that I like to use. So this is the same one will price. Actually, this is the same one I price because this is the 740 credit score. That's the one I typically price when I'm pricing the today's rates scenario. This is a 640 credit score pricing sheet. But the main point of all this is all right, you have interest rates on the left side here. You have points right here in this column, and this is the charge or credit associated with obtaining this associated interest rate. So you'll hear lenders, including myself, mention par rate. So the way that and par rate is defined as the rate that you can get in this scenario without either a cost or a credit. And cost or credit means you either pay this or you get this back. So you either pay this fee or you get this amount credited back to you at closing. This is a one-time charge. So you would, in this exact scenario, you would pay $702.05 to obtain a 6.99 interest rate, or you would get paid $171.83 to accept a 7.125% interest rate. What I do when I'm quoting par rate is I look at a chart like this and I go down to the first rate that I see that is green. So that's the first one with a credit instead of a charge. So ideally you would see a zero somewhere on this chart, but depending on the lender, you usually don't actually see a lender, a zero. Sometimes you see Some of them will round one to a zero, but a lot of times you see these numbers that don't actually have a zero anywhere. If there were a zero, it would be between these two somewhere, you know, somewhere in here. So if you asked me for this exact scenario, what par interest rate is, or most people don't use, most people not in the industry don't use the word par. If you just called me and said, "Hey, Cameron, what are today's rates for this exact scenario?" Hey, I got a 640 credit score, all that good stuff, and I punched your information in and pulled up this chart, I would tell you today's interest rate is a 7.125 for your scenario. And again, so I don't get in trouble, 7.125 is a 7.925 annual percentage rate, or APR. Anytime you're quoting interest rates or talking about interest rates, you have to also include the APR so that you're within compliance and people know the cost, the true cost of obtaining this loan. So 7.125 is par rate. These are points, again, that you can pay. And it's called points because it's 1%. One discount point is 1%. So, and I guess I should have said this so that it makes sense. This was a $250,000 purchase price, with 3.5% down because it's FHA. So that's 241.5 loan amount. So 1% should be, since this basically $250,000 purchase, you would think 1% would be $2,500. This is not exactly one, so it's not exactly 2,500, but that math should make sense. So 1 point is 1% of the loan amount. So if you were to pay 1%, which is 2614, and I'm just going to leave off change in all of my math and what I'm saying just to make things quicker and easier. So 1% is 2614. So if you pay 2614, you can get a 6.25% interest rate. And again, for compliance, 6.25 is 7.143 annual percentage rate. So you can choose, and I tell people, you are more than welcome to choose what interest rate you want. Now, you make your choice because this requires, if you're moving up the chart or down the chart, however, whichever way you want to look at that, if you're moving this direction, it's going to cost you more money. So if you have additional cash that you don't mind spending, you could pay these fees to obtain these interest rates. The decision you have to make typically is, what's important to you as the borrower. What's more important to you? The lowering your monthly payment. So these are payments associated with these interest rates and discount points. So as you make these payments, or you pay this charge, you get that interest rate, and that's your monthly payment. So is it more important to you to move your payment down lower, or is it more important to you to retain your cash? If you would not like to pull this money out of your pocket, then you would typically you take the par rate. Another thing I'd like to point out is these numbers don't always make sense. So you can see they're not actually in the order you would expect them to be exactly. So like you can see a 6.99 rate has a 702 charge, but this 675 is cheaper than that one. So in this case, if you were going to pay a couple $100 to move your rate down, there's no reason you would choose this one over this one. This is a cheaper rate than this rate for less money. So this is a kind of a pricing anomaly And there's different reasons why those exist, but you just have to pay attention when you're looking at the chart. Yeah, I wouldn't sell anybody a 6.99 rate when I can see that the 6.75 is cheaper. So this one doesn't make sense to choose. This one would make more sense to choose. And then you just have to look at what the charge is associated with that rate versus how much money you're going to save on your monthly payment. And I typically do the math for people and say, okay, if you want to, move from par rate to whatever rate you want to choose, I would calculate the difference in the monthly payment between those two and divide it by the cost associated with that and tell you how many months it would take to break even. So I ran numbers earlier, and both the scenarios were somewhere close to 2-year break even on moving, on purchasing one discount point. It was approximately 2 years ish on break even. So this is the chart for 640 credit score, and this is the chart for a 740 credit score. Everything else being exactly the same. So you can see on the 640, par rate was 7.125. On the 740, par rate would be, again, you move down the chart until you find the first green number, and that is a 6.75% interest rate. So it was 7.125 with a 640, and with a 740, it's 6.75. And the same thing, if you wanted to look at one discount point, that would move you to a 6.125 interest rate, which I've already pulled that up, is 7.018 annual percentage rate. The par rate, which was 6.75, is a 7.542 annual percentage rate. So I hope that helps in explaining discount points. I think once you see a chart like this, it's way easier to understand when somebody says, hey, should I buy points? You have numbers that you can look at, and you don't have to buy, another little misconception, you don't have to buy in whole numbers. You can see these are different fractions of whole percentages. That's basically 1%, 1.065%. But you can buy a 0.5%. You can buy, that's basically a half. That's basically a quarter. There are limitations on how much you can buy this down, but that's way more nuanced of a discussion. The main thing I wanted to go over was what discount points are, and how that looks. Again, these are real numbers. So if you had the exact scenario that I have punched in here, and you were a good fit, or Rocket Mortgage was a good fit for you, then this is exactly the numbers I would be pulling up for this exact scenario. So again, a lot of people don't do that because it's for multiple reasons. You have to have so many disclaimers in place, but I don't mind doing that. This is what I would do for somebody on a one-on-one discussion. I do this exact same thing. I do a screen share. I show them the rate sheets and let them pick what they want their interest rate to be. So I hope that's helpful. I think I'm going to do more of these presentations. I think they're really informative and helpful. And if y'all don't mind, give me some feedback. Let me know if you have any other questions on discount points, or anything on this same subject matter, or if you have any other questions you'd like me to directly address and go over and make it clear for you.